Hey guys, thanks for joining me here in my market report. And the market report, of course, is going over mostly mortgage rates, but also a little bit of stock because they do correlate with one another. But mostly we're looking for to kind of have a report to kind of go over what's affecting mortgage rates for that particular day. So without further ado, let's jump into the economic reports being released today. So we got the leading index. And the previous report initially came out 0.3 on the index, and it came in revised higher in zero point 0.4 back in December. Forecast for January was supposed to be zero point 0.5. It came in right at expectations at zero point 0.5 here, which is obviously good news because that shows that there will be expansion kind of growing further down there. Anything below zero or below, of course, you're kind of contracting on this type of index. Let's jump ahead here to the headline news. Stocks are a bit mixed this morning. Dow's about the only one kind of going positive territory. I think even S&P kind of is dipping its toes a little bit in negative territory, and Nasdaq has been probably taking the bigger one. A lot of it has to do with the higher yields, the spike in yields that we've been seeing over the last week or so. And what this is it's bringing on. I put it here possible chain reaction because the higher yields basically represent higher inflation, higher cost to businesses, and with the higher cost of businesses, that means less profits for investors on those stocks. So that's why you're seeing a pullback, especially on the high tech industry or sector, and you're getting kind of a pullback on Nasdaq because we're valuing those stocks a little too high based on based on lower yields. But now that yields are rising, of course, it could potentially be less profit for them, or not that they're not profitable, but less profit. We also got, of course, the Fed may step in. They may get a little bit more hawkish and maybe start raising rates. There's also talk that they potentially could uh, pull back or scale back on their asset purchases. So we're still kind of waiting to see. So these next few Fed meetings will be important to see if there's any change because there's a lot of data kind of showing that maybe we might have that, especially with the vaccine rollouts, fewer cases out there. Uh, so an economy seems to be picking up a little bit, but even though we see jobs to be relatively high, there's been reports out there that people are taking multiple jobs. Reminds me of back during the credit crisis when after that one where people to survive they were out of work for long periods of time and then they would take multiple part-time jobs just to try to stay afloat, and we're kind of starting to see that again. Let's check out mortgage rates and see how those are reacting today. And as yields are going up, mortgage rates are getting pressured lower again. So we're down about 36 basis points, which translates to higher rates again today. So this trend just keeps dropping, 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 dropping. As you can see here, we dropped quite a bit here, from like 103 all the way to 102. That's 2 points basically in pricing that we've seen over the past 3 weeks basically uh, in that range here. So this is what's adding a little bit of pressure. We're getting into an area where we should see some type of hopefully floor, and then once we get that floor, we may get some bit of a correction because this has happened a little too quick and a little too much too quickly. And I do think at some point we will see a correction. It's just we're trying to find that footing and find out where we might get it. We kind of thought we had seen that right around this period here, but again, it didn't work out, and then we just started dropping it further over the last over like Friday and today. Here's yields. Sorry about that. Oh, sorry about that. Sorry about that, folks. Little technical error. There we go. Here we go. Treasuries. Yeah, Treasury up 1.36. Sorry for all the screen there, but yeah, well, just under 1.36, and it keeps pressuring. So we broke about this technical level ceiling, and now we're up against the next one. But we started the day up here, and now we tried breaking below it, but we kind of pulled back a little bit again as well. So again, we just keep rising and rising, and investors are looking at this a lot more heavily now because of valuing are these stock prices too high now, and they might see a correction in the stock market. All right, so hopefully that makes sense. But again, we are seeing a rise in mortgage rates as well, and which is not good for those who are looking to refinance or purchase. So speaking of such, if you guys got questions about mortgage rates or trends, or if you got different one about different loan programs, a little bit of background about myself. I am a loan officer. I work with the national lenders, so we can help people in all 50 states. I'd be more than happy to answer questions or look at anything that you might be looking to do, whether if it's in terms of getting pre-approved and purchase or if you're looking to refinance. I'd be more than happy to look at what you may have and see what we can come up with for you guys. Just feel free to reach out anytime. And meanwhile, you guys have a great rest of your day. We'll see you guys tomorrow's video and take care. Bye bye. Thanks for watching.